Someone from SoCal.
So, good morning, everybody. And again, thank you for joining us and giving us your time. I know that's precious, so we want to make this valuable to you. We are meeting to have our Meet an Investor series, and we have JJ Risha from Pismo Ventures here joining us. JJ, why don't you introduce yourself and tell us a little bit about you and your company?
Thank you very much, Sam. Thanks for all of you for being part of this. Hopefully, we'll make it valuable for you, as Sam said. Uh, uh, I am CEO and founder of Pismo Ventures. Pismo Ventures is a venture firm and also quasi advisory firm for early stage startups. So we help startups with their journey from all the way ideation, all the way to raising capital and exit. We also invest in them, and we help them raise capital through our network of investors. We have a very large network of investors that we are, good have good relationships with, that we've built over the years. So that's kind of Pismo Ventures. That's what we do. We have expertise in life sciences, medical device, software, e-commerce, cybersecurity, crypto. We have team members that have expertise in different areas that could potentially help our startups, and as well look for the right startups in order for us to invest in them as well, and in order to pass them along to the other investor groups that we belong to and are part of our network. Personally, I'm a serial entrepreneur. I've started 10 different companies, mainly in software. I've exited 3 out of the 10. And out of all of them, one of them was really big. The rest I've learned from, and I keep learning every day. As Sam may know, we keep learning. Although we do this, I've been investing for about 15 years or so now, but I could tell you I enjoy the learning process.
That's fantastic. With such a large amount of resources, that sounds like you have a lot of opportunity to be able to help founders with the different things that they come up with, because lots of times founders run into a large diversity of problems. I mean, do you have a quick example of maybe some of the situations where founders have been part of your portfolio or part of your symposium, which we can talk about later, that where you were able to help somebody overcome a specific hurdle?
I'll have to think of one, but I could tell you something while I'm thinking of that. Something that I think most entrepreneurs, especially early stage entrepreneurs, don't think of, and that is most of them need a lot of help in order to shortcut their way through, especially the ones trying to raise capital, right? If you're not trying to raise capital, also I think you may need help, but you may have, the time is maybe on your side. But if you're trying to raise capital, you have a product or a service or a medical device that is potentially timely and requires investments in order to be able to launch your company. There's a lot of things as an early stage and maybe first time entrepreneur that you may not know. So someone like Sam, potentially, or someone like Pismo Ventures, like me, and many others that are available, that could help you really shortcut a lot of things that you don't know about what it takes to start a business, what it takes to build a company, what it takes to build a team, what it takes to raise capital. So there's a lot of things, and the different terms that are associated with raising capital, what investors are looking for. So what we do is we help you with that. Of course, potentially, everybody says we can help you with the pitch deck as well. So it's not really about the pitch deck. It's really the story and the strategic way you put together your pitch deck, your strategic financial planning around it, etc.
Hmm.
So one of the things that I see all the time, companies come and they say, well, can you just give us the money and then we'll be $1 billion very shortly. and that's usually not the case. Or sometimes they ask, you know, we just need the money, and then, you know, we'll make it happen, and then we can figure it out. And I tell everybody, you know, everybody can figure it out on their own. I'm sure they can. It's just the time. How much time is it going to take you to get there? And so one story, one example, just to respond to Sam on that, is a company came to us about, you know, 4 years ago or so. They're saying, oh, about 3 years ago, just before the pandemic, and they wanted to develop a software specifically related to skincare. Um, and so we told them that they need a lot of help, and they said, no, we'll do it on their own. 3 years later, they came back and they said, we still didn't get anywhere. Can you now help us? So sometimes you need help. You know, don't shy away from asking for help. And that's gonna really help you get there much faster and shortcut your ability to raise capital.
Yeah, you know, I think that's really good advice. It's sometimes hard to follow when things get busy when you're running your startup. Where last night there was an event with Vinod Khosla that I happened to be at. I was a sponsor for the event, and he talked about the importance of constantly learning. What's your take on how founders should invest time in learning versus running the startup and the day-to-day grind? How do you have any advice on how a founder should carve out time to make sure that they are learning and going through getting the education that they need?
Yeah, I agree. I think I mean, it depends where you are, where you're at in a startup journey, right? I think that's part of it. In the early stages, you may need to you know, keep learning, keep educating yourself in order to continue to progress forward. Maybe when you raise capital, you may be so busy that, you know, you're running the day-to-day operation. You still have to find ways to continue to learn and educate yourself. But and that's why sometimes you know, others can help you while you're able to run your business at the same time. So I think education is definitely great. You got to carve out time. The way I did it, to tell you the truth, I still do it, but the way I did it when I was starting companies is I made sure I had 1 day a week where I did nothing except try to read about new things, try to learn about you know, either the investment world or things about you know, one of the things that I you know, I didn't know much about is running an operation. So I spent a lot of time reading books about operations and how do you run an operation, because as a CEO, as a COO, you need to be able to run your business, and that's one of the things that I concentrated on when I was trying to do this.
Yeah, absolutely. That can be very challenging. So there's a comment in the chat window about how it's hard or not possible to be a master of all things. That's true. The challenge though is in a small startup, if there's just 3 people, and you know, we identify 7 specific functions in a startup. Founding, funding, and exit is 1. Engineering is 2. Product management is 3. Marketing is 4. Sales and channels is 5. Customer success 6, and then operations, which includes HR, finance, legal, all that stuff. So 7 different functions. If you only have 3 employees or 2 employees or whatever it is, the 2 founders, you kind of need to know a little bit about everything, and you need to know enough about each of them to not make major mistakes. Okay, so it is hard because there's the tension of, yeah, you can't be an expert in everything, but until you're large enough to hire veterans, you have to know enough to keep things moving and not mess something up. That's really, really hard. Yeah.
I agree, and that's where I think these entrepreneurs, and again, I was in there, and I was there many times, and I learned it the hard way. But you have to be able to learn to also delegate, because you can't do it all.
Yeah, yeah. I'm actually doing speaking at an event on Tuesday on how learning is a key founder superpower. Okay. So if you're interested, I think we'll be blasting out an email about that. It's with Midday Connect, another startup organization, Summit Venture Studios. But anyway, maybe we can get back to some back and forth here with JJ, because I'd love to pick your brain on a couple other things. Can you give us a little perspective on maybe what your investment theme or philosophy is? Stuff like, what stage do you typically invest? If there's a preferred check size, industry, focus, whatever. What is your target investment theme or philosophy?
So in general, we invest in people. So that's the first thing that really everybody should understand. So and domain expertise is really important to us. So we invest in teams that have domain expertise. So that's first and foremost. Second is we don't invest in ideas. So there's got to be something that's there already. If you're building a software, if you're building a widget, you need to have something already in place. So we are early stage, but there's got to be something in place. Maybe an R&D, maybe an MVP, minimum viable product. If you're a life science or medtech company, then it's a little bit different. But there's got to be something. It couldn't just be an idea. So for non-life science companies, we'd like to see some traction. Traction could be in different ways. It could be some revenue. It could be, customer demand. It could be, so we'd like to see something that shows that someone is really wanting that product or service that you're trying to sell in the marketplace. Other things, the market needs to be large enough. And so what's large enough? And the definition of large, could change. But a lot of what we see in the market in startups coming to us, they try to make the market really large, like 70 billion or 300 bazillion. I mean, some really large number. It doesn't have to be that big. If you have a market that's a size that's in the hundreds of millions, it's still big enough. It doesn't have to be in the billions all the time, but it needs to be. It cannot be sub 50 million, let's say. That's not big enough, but it needs to be big enough so that maybe in 3 to 5 years you can reach 30-40 million dollars in revenue, and that should be plenty enough to be able to think that there could be a potential investment here. Also, the other thing, Sam, we look for is potential return on investment of at least 10 times our investment. So and what that means is, if you have a company that and again, I'll say something in general, and that is most companies end up selling for, let's say, 100 to 200 million. Okay, of course there are the unicorns where there are in the billions, of course, but these are very few and far in between. But if investors in general are looking for 10 times their investment, then you need to also make sure that what your valuation needs to be in line with that as well. So these are the things we look for: the team, not an idea, some traction, and also, of course, the deal terms, which means potentially can we get 10 times or more our investment dollars. So some of these things could eliminate someone. So if we don't think, if someone comes in and says, I want to raise $1 million on $100 million, we know that we're never going to get it. So that could immediately rule that company out.
Right. Yeah, you mentioned some very important things. Very common is the theme and the domain expertise. There's a question in the chat window about that. I think what you're referring to is just something about the business that you're selling into.
That's right. Yeah.
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 I would probably not be a great person to start a coal mining business because I know nothing about that. Okay.
Absolutely. I mean, I could tell you one example. One of the companies that came to us, and they're starting a CPG, a consumer product.
Mhm.
Um, and the person that is starting it, most of his career was a Xerox salesman
Mm,
and has no idea. They didn't know how to market and sell a product, a consumer product, which is very, very difficult, completely different
right,
than
right.
being in the sales, especially in sales of copiers.
Right, right. No doubt about that. It's kind of funny that you mentioned there's a question about attractive market and market size um, in terms of TAM SAM. You mentioned that the market doesn't have to be a billion or 10 billion or 100 billion, that something in the millions, probably 100 million and up, is still possible. What I would say is, in my experience, um, if the market truly is, say, 250 million, um, that it's still possible to help an investor make 10x their money, but you can't raise 100 million.
That's right.
Okay. All
Right.
right. You're going to have to make sure that you can describe a story where if you raise 2 million with a $250 million potential exit or whatever, just that it makes sense. If you raise a lot of money, then the market better be huge. And these are things that I see lots of founders make mistakes where they don't take the time to do the investors side math.
What's in it for me, for investors?
Yeah, yeah, with them. Okay, that
Yeah,
is.
exactly. I mean, I could tell you one example. One company we invested in, that's probably about 7 years ago now. Um, they only raised $1 million,
Mhm.
and then they sold 4 years later for 135 million. So that's amazing, right? So,
Yeah.
and that's not a unicorn, right? It's a good investment, good exit, not a unicorn. Um, but they only raised 1 million. What they did later, so we had one of our really close investors was on the board. When they wanted to raise money the next time around, he said, let's not raise money. And they went and got a loan for 10 million. They were already generating some revenue and got a $10 million loan. And that was better for them. They never gave up equity.
Yeah, that sounds great. If you can get non-dilutive funding, we did that for startup number 4. We didn't get 10 million. We got 1.5.
Yeah.
Okay. But it was non-dilutive. Okay.
This company was already making $15 million a year when they went and got a $10 million loan. And then when they exited, they were making almost $40 million in revenue.
That's
So
fantastic.
yeah,
So I think what that says is that you don't have to have just one pathway to growth, and it's not all about raise all the money that you can and try to be a unicorn. You don't have to be a unicorn to be successful. Okay, but you should do the math to make sure that you're not doing upside down situations of raise 100 million and sell for 100 million.
that's right.
All right. Maybe one last question, then we'll open it up to some live questions from the audience here. Uh, what would you say? What advice would you give to people? Because a lot of people are trying to reach out to investors. What makes, when somebody reaches out to you, what motivates you to actually respond? Because you probably get people blasting you with, "Hey, help me, fund me, fund me."
Yeah. So I mean, it's for me, maybe it just right now the world has changed as well. We used to always say, "Hey, look, go meet in person," but now
Mhm.
the world has changed and everybody's meeting via Zoom and other ways to connect online, but especially after the pandemic. But I would say, when you reach out, just a sentence or two of what you're trying to do. Uh,
Mhm.
don't send me your pitch deck of 100 pages and say, look at this, or give me 20 minutes of your time. Just reach out, and in our situation, what we have is we have a short questionnaire that we ask you to fill out. And so and through our platform, so we send you a link to our platform, and you fill out a short application and a short questionnaire, and from there we will be able to tell quickly if you fit what we're trying to do or not. And it's simple, again, just like what I said. If you understand your tam sam sum, if you understand what your evaluation is, what your terms are, if you understand your market, all this, we'll be able to, we'll give you the time to pitch to us, and that way, it's instead of sending or pushing your, pitch deck, or write, 3 pages, say read this and give me 10 minutes of your time. Just give us a sentence or two, and just to give us an idea of where you're at, and we'll be happy to take a look.
Yeah. Yeah. So I just posted in the chat window. I have 3 acronyms that I usually recommend for reaching out. BLUF, bottom line up front.
Yep.
Second acronym, KISS, keep it short and simple. Third acronym, we already mentioned, WIFM, what's in it for me? What's in it for the investor? Okay. Oh, great. We're nearing the bottom of the hour, so we'll go about 5 minutes or so with some live questions. Go ahead and unmute.
Let me quickly mention the symposium. Yeah.
Oh, yeah. Please.
So we have just quickly, you're all welcome. So we have a startup symposium. It's coming up. The deadline is October. It's October 30th, in a few days. It's free for you to attend. What we do is we promise you exposure to a lot of investors. So we'll put, that's the link for the symposium. So if you're interested, please take a look. The website has all the information. It has a timeline. It has the investors who will be on. It has some of the investor groups will be there. Again, it's free to attend. And you're welcome to sign up. It takes you about half an hour to go through the process of signing up. If you're interested, please feel free to do so. This is non-life science, so all companies except life science companies. So so B2B, B2C, software, crypto, anything is for this symposium. If you are a life science company, we do the life science symposium in Q2 of next year. So you can stay tuned.
So the link for the Pismo Venture Symposium is in the chat window, and I'm sharing a browser window with the webpage. Okay, so definitely take advantage of it, and let's maybe take a couple of questions here. Right now, while people are working on unmuting, etc., and queuing up the question, there's a question here on the acquisition that you mentioned. What was the multiple on the valuation versus their EBITDA, or was it a multiple of revenue?
It was multiple of EBITDA. I don't remember what that was, but the return was to the investors 22.5.
That's great.
Yep.
That's great. I've gone through the M&A process 7 times, resulting in 6 exits. Okay. So 3 of them were companies I actually worked at. The other 3 were companies I either acquired or advised. The multiple question comes up often because that's a simple factor, but that's not the only factor. Okay. With startup number 4, which is the first company I was at that actually got acquired, the multiple was rather simple, but we were able to increase the multiple because we had more recurring revenue. The other thing that helped us to increase the multiple was the fact that we had trade secrets that the buyer wanted access to. We had processes, methodologies, etc., for selling into a certain market, and the buyer wanted that because they wanted to enter that market. So it wasn't as simple as, oh, you got 3x or 2x or 5x or whatever the number. There are other factors which adjust those multiples. Okay, so keep that in mind.
True. Yeah, the question in the chat, yes, it is it's a remote virtual online event, so you can be anywhere and apply to this. Yes, so we have companies from all over the world that connect as well.
Okay, great. So there is a question in the chat as well as in your experience through investors, including yourself, look at investments that might be outside of your area of expertise. And it gives an example of a product, a physical product that is not commonly, it's not a consumer packaged goods. It's not a common product, but it solves a very specific challenge of, inflatable barriers. Okay.
So I would say as long as it's yeah, as long as it's solving a real problem in the marketplace, if we don't know, if we don't have the expertise internally, we can always find someone who can tell us about that specific industry. But also the important thing, other than solving a real problem in the marketplace, also the number of competitors cannot be in the hundreds. You need competitors must be there. If they're the only one, there's always something wrong. But if you have a dozen competitors, I think it's good, because that proves there is a real market for what you're trying to do. So yeah, would love to take a look, and if you're interested in the symposium, apply. We'll see it.
Okay. So there's another question here. How do founders set the valuation of the startup before meeting with an investor, or is it done after? How's that done?
Okay, so really, sometimes it's, you go like this, but most of the time is, so there are different ways where you can set the valuation, right? So one is, it depends if you're really early stage. For example, there's a friend of mine, his name is Dave Burkus. It's called the Burkus method of valuation, and it's really simple. If you have an idea, it's 500,000. If you have a team, it's 500,000. If you have a product MVP, it's 500,000. If you have customers, it's 500,000, and if you have revenue, it's 500. So it ends up going from 500 all the way to $2.5 million based on five criteria. So other than that, really, it depends on a lot of things. It depends on how much progress have you done, and is that progress significant enough to increase the value of your company. So that's how, again, you'd have to look at others, but in general, another way of doing it is you go and get what's called a 409A valuation, or some kind of other valuations that are set by specialists. But as an early stage company, you don't need to spend the money on these. Sometimes you can, but they're usually anywhere from, let's say, $1,000 to $10,000,
right,
to get some of these valuations. But they don't impress investors. Investors will decide eventually. If you're not extravagant in your valuation, then investors will probably take it.
Okay, got it. Appreciate the perspective. Let's take one more question, and then we'll just wind down and wrap up here. There's a question from Michael. We launched an MVP a few days ago, but haven't generated revenue yet. Am I better off waiting a few months to reach out to investors, or is it worthwhile to start now?
Well, you know what? You can always practice, right? So the more you talk to people, the more you talk to investors, the more you go learn and network, and it's probably better for you. Maybe tell the investors, I'm not raising capital right now, but this is what it is. What do you think? And try to get some feedback, and then try to learn from them what they're looking for, or if what you're doing seems to be valuable or not. The more traction you have, the better the value of the company is.
Okay, got it. All right. Well, definitely thank you very much. And we'll kind of wind things down here. Before we let everybody go, just remember, take advantage, take a look at the symposium. Sounds like a great resource. And since it's once a year and it's coming up next month, the time window is perfect. Okay. So don't forget to look at that. I'm going to go ahead and maybe wrap up with one thing from my side as well. We have one of the things that Fundable Startups does is we do a lot of startup training, and it comes in two formats. We have an academy format as well as a self-paced format. On the academy, we do live instruction. It's 12 weeks divided into two 6-week cohorts. 2 hours per week. The self-paced is just video on demand. What we cover is effectively 24 hours worth of content in the academy if you choose to do both part 1 and part 2. But the self-paced is all of our current and future training, and we have so far over 35 hours of training. Coaching is included in the academy, whereas self-paced you can do an optional add-on. The cost is about 2.5 to 3K. We have discounts available, and self-paced is a more affordable solution. If you are interested in the academy, we have one scheduled for it. The academy is called Fundability Before Fundraising. We have the first 6 weeks Fundability scheduled for January 2024, and there's a promo code here. If you're interested to get $500 off, we'll close it and we'll leave these online here. A QR code if you're interested in either Academy or in the self-paced training. So thanks a lot. JJ, any final words as we let people go?
Yeah, thank you very much. So I'll say one more thing about the symposium. We have one day, with 2 days before the actual symposium, which is November 16th. On November 14th, there is a full day of webinars and expert panels.
Yeah.
Again, if you sign up, you're able to attend those for free. That could help you out. So it's basically webinars about different subjects. You'll find them all online if you go there. Sam, thank you very much. I appreciate the interview and the chat today, and I hope we made it valuable for the attendees.
Okay. Thanks, everybody. Apologize for going a little bit long, but we'll call it now. Have a good one.
Bye-bye.